Gold has skyrocketed past $4,000 an ounce, and investors worldwide are buzzing with questions about what's next for the yellow metal and gold mining stocks. So to navigate this golden opportunity, we turn to John Doody, renowned editor of John Doody's Fave 5 Golds and a leading authority on precious metals investing. John, always good to be back with you, my friend. Nice seeing you.
Always pleasure to be back with you, Danny. Thanks for the invite.
Well, look, the headline of your latest newsletter really caught my attention. I said, man, we got to call John and bring him on because you're asking the perfect question. All right, we hit 4,000. What's next?
Well, what's next is higher. What's happened is that there's fewer guardrails, economic guardrails on Trump than there were the first time. And so the first time was great for gold. We made a lot of money. Gold was up 55% in his first administration. The dollar's that was down 10.6% then. I know your subscribers don't like to hear this, but I'm supposed to speak the truth. Speak the truth to power is what they say. So and this time around, the dollar is down 9% and gold is up 50% again. Again, it's a function of now it only took 9 months for this to happen, this 50% gain. And it's because there's fewer guardrails on Trump. I'm not saying all of his policies are bad. Some are good. But he's so disruptive and so chaotic in what he's doing without a lot of thought. It's just what happens to pop into his mind at the time, that it creates confusion for investors, and worldwide investors. And I see that doesn't really end until he leaves office. Maybe it ends to an extent in the November 26 elections if he loses both one of the houses. Right now, he's not only got the presidency, but he's got the Senate and the House. So if he loses one of them, maybe that'll be some kind of a slowdown on his policy changes, because it takes more work to get things done.
But John, what about, okay, I understand the chaos, but really the gold price surge has been driven by central bank buying, right? So talk to us a little bit about what you're seeing there and what that means, why there is such a strong trend towards finding assets that are not U.S. based. I mean, they own more gold now than U.S. treasuries.
It's a dollar alternative, although a lot of the big increase in the gold holdings of the central banks is not due to more ounces held. It's just due to higher price of gold. And I think the ounce is much more steady than the gold price. So, but nonetheless, it's that's the reality, is that there's the central banks are less enamored of dollars than they used to be, and more emerging market central banks and the BRICS are buying gold, whereas they weren't much of a gold holder in the past. So I think that's just it's natural. But the dollar is not going to be dethroned as a reserve currency. It took 150 years to dethrone the pound. It's only been 75 years roughly since Bretton Woods in the mid-teens, 1944. And so gold is only half dethroned, and if that's a 150-year spectrum we have to look at.
John, what do you tell? Because I'm sure you've been getting those phone calls from your friends saying, okay, John, maybe I didn't buy gold before, I didn't buy silver before. Is it too late? Is the price too high now?
No, I don't think so, because the cause for gold going higher isn't going to change. It's unless God forbid Trump dies, the first opportunity to change the policies of the U.S. government comes in November of 2026, when perhaps the Republicans lose the Senate or they lose the House. But if they continue to maintain control of all three branches, it's not going to end until the 28 election, and even then the Republicans could win again. So I don't really see any change here. That you have to be involved in this market, and of course I think the best way to do it is through stocks. My stocks are up 160% so far this year for five recommended stocks. but gold is up half of that, which is certainly good.
We'll get right back to the interview, but this is an important moment to ask yourself, when the next crisis hits, will you be properly positioned or wish you prepared earlier? I've spent over 2 decades reporting on global economic shifts, and what's happening now is unprecedented. In moments like this, timely decisions are critical. That's why we've put together the Private Wealth Playbook. It's a free guide showing you how to use gold and silver strategically for protection, privacy, and long-term performance. Click below or visit DannyReport.com to download it now so you can move forward with clarity and confidence. Now back to the show. John, talk to me about the silver run.
I'm not a silver bull. It's a derivative of gold. When gold goes up, silver goes up. And that's exactly what's happening here. It's poor man's gold, and it's acting as it should. Platinum and palladium are up too. Copper's up. Copper's almost $5. I mean, that's an amazing price for copper. I remember 20 years ago it was 90 cents.
As an economics professor, I know as a former economics professor, I should say, I need to get your thoughts overall on the U.S. economy. I just see the latest quote from Jerome Powell saying that the Fed has its own contacts and data sources for monitoring the health of the U.S. economy. And despite the federal government shutdown that we're in currently, and both inflation and employment do not appear to have changed significantly since the Fed's last meeting. So he's saying basically, jobs and inflation have not changed much, but growth may be better than expected.
Well, he's got better sources than I. I think we've got a recession ahead of us, and it may take a while to materialize, but it's not a factor in my thinking about where the gold price is going to go. It
I'm
will
sure
be
a lot of that.
if Trump
Yeah.
gets rates. If Trump replaces Powell with somebody that lowers rates, yes, it'll have an effect because I think that lower rates is always good for gold, and it'll probably stimulate inflation, which will be good for gold too.
Yeah.
I think most
John,
people are seeing 3% rate of inflation by the end of the year, as opposed to the Fed's target rate of 2%.
I need to ask you, how do you feel with gold at these prices? Having covered this market for so long, it was always a fringe market. It was, it was kind of like the outcasts. Wall Street made fun of the gold bugs. And here is CNBC now with almost constant coverage of gold. How do you feel?
Well, first, I don't watch CNBC because they don't like gold. They used to invite me on a lot, but and there was always to use me as a punching bag. So I said I'm not going to do those anymore. But it's becoming more mainstream. But my invitations to dinner parties have not picked up. I'm available for dinners there for anybody local watching, and I think that it's got a ways to go. And I haven't been in an Uber for a while, but I don't know if they're the modern day equivalent of a taxi driver, that you don't want to get your tips from Uber or taxi drivers. But I think we got a long way to go. One way that I look at stocks. And I look at stocks, that's my forte, is stocks, not the gold price, although the stock prices are a derivative of a gold price. But, I look at stocks based upon what I call the operating cash flow multiple. How much money are they actually making, and what's the multiple of that? And the average stock right now is trading around a multiple of 8 times their annual cash flow. And that's, been as low as 4 and as high as 12. So the stocks have got a long way to go to catch up to where it's been in the past.
Let me ask you this, John. If there is a major, let's talk about a major correction, crash, whatever you want to call it. How do the mining stocks hold up?
Well, I think it depends on what gold does. But in the beginning, in a major correction, all stocks go down because buyers disappear. But if the gold price holds up, the buyers come back to gold because it's a way to play gold, but without actually having to own it. And so I don't think that any crash in the gold stocks will be long term.
There you go, John. If you come to New York, I'll take you out for dinner.
I'm coming tomorrow.
Then I'll reserve your favorite steakhouse. How's that?
Okay, thank you.
All right, all right. John, always good catching up with you. You can read more from John Doody's Fave 5 Golds. And we'll see you soon, John. Take care.
Okay, thank you, Danny.
And thank you all for watching. More great content coming your way. Be sure to stay tuned to the Daniela Cambone Show. And as always, I ask you to subscribe to our channel. It just keeps us going. And if you are interested in starting your journey in precious metals, reach out to my wonderful colleagues at ITM Trading. There's a link below in the description. Tell them I sent you. They'll take extra great care of you. We'll see you soon.